sell all the stocks you had, but even to get long on the stock market, and that's what I did. But still, those uncertainties always bring a lot of doubt in the head and in the mind of investors, and that could be a good thing for us and for our goal. For me, gold could easily reach the $1,700 per ounce level for one main reason. All those uncertainties are just feeding gold and I would say the gold appetite that is already in place since 2019. Look at the gold in 2019. We took 20%. The trend is bullish, and as you can see, if you look at I would say the flows of gold and what is going on the gold at an institutional level, you have a lot of nations such as for example Germany, who took back their gold. Okay, Germany had gold in New York. They requested to get it back in Germany. So you have a lot of China did the same, etc. So you have a lot of nations that are moving the gold they had outside inside of the country. The gold also demand is always a little bit rising at this, I would say, at this period of the year. You have a cyclical event on the gold. At the end of the year, basically the gold is rising because in Asia, people tend to buy jewelry, etc., to celebrate, to make gifts, etc., because there is a lot of, I would say, there is a big culture of gold in those specific regions. And so for me, in 2019, we had a gold that took 20% of its value, and to be precise, 18%. So the gold rose by 18% in 2019, and for 2020, going to $1,700 per ounce is nothing much. Like, for example, from the point we are right now, it's less than I would say 5%, something like this. So let me take the exact price. It's 6%. Okay, so the gold has to rise from 6% to reach the $700 per ounce level. This is something that is clearly feasible, and this is not impossible to reach. So this would be one of my I would say strategy for the year. For the year, even though I have a take profit at $1,661 per ounce, I think that for 2020, so 2020, we can reach that level. Let me switch on to the stock market, and especially let me show you what is going on the American Dow Jones. So we have a bullish trend, and we are right now inside a trading range. So basically, this is what we are looking for, and this is what we are also looking at. I mean, you have here a big support level that was hit with the coronavirus crisis. You have now a resistance level that is set around here. So this is the last high, 29,600 points. And my opinion on that is that we are going to see bullish market, and I'm bullish on the market. I'm bullish on the market. I went long at 29,521 points. I have a stop loss around here at 29,021 points, and I have a take profit level at 30,521 points. So I'm bullish on the market, and basically on that trade I have a risk to reward ratio of 1 to 2. So basically, I'm putting at risk $1 to get 2. So that's kind of a good deal, I will say. I'm in the trend, so basically the trend is bullish, the trend is up. And this year, even if we had a lot of uncertainties, the market just rose and rose and rose. So I'm just playing the numbers here, okay? I'm not trying to guess what will happen or to guess what will be the next crisis of the world. I'm just looking at the facts, and the facts are that the market is bullish. The market is taking value. Some will say that the market is overpriced, that the price to earning ratios are way too high, and some others will say that no, we just have to keep following the trend. The Fed will not will not, I would say, change our plan, etc. And what about the Fed? Let's talk about the Fed, and let me show you also the euro against the US dollar. We also have a trade here. So basically, on the gold, we are making money because we bought at $1,560 per ounce. We are now, the gold is now trading at $1,608 per ounce. On the Dow Jones, I'm losing a little bit of money. I bought here on the purple line. Stop loss is here, take profit is here, so my position is not in gain. I'm slightly in a little loss, but that's the market, that's the game. On the euro against the US dollar, this is also a trade that we opened early January, so on the 14th of January to be precise, if I'm correct. This is one of, I would say, one of my best trade of 2020. Even if the year just starts and everything is fresh for now, we went short at 111.23, and I'm targeting on that trade 105.51. So basically 105. And I have a stop loss at 114, okay, 114.15. This is the exact price, but you can consider it 114 if you want. And this is a good trade. This is a good trade in terms of percentage. It's not that much. I think I entered here 14th of January. It's here, so okay. So the euro against the US dollar just lost 3%. So if you are trading the equity market and equities in general, for you, 3% is only an intraday move. Just have a quick look at what Tesla did yesterday. Tesla just rose by 7% yesterday. So basically, Tesla in one day takes 7%. The euro against the US dollar lose 3% in 2 months. This is not comparable, and the volatility is clearly not the same. As you know, the currency market is basically more stable and is less volatile than the equity market. If you look at it historically, if you look at the currency market on the long term, yes, you have also some events like, for example, the 15th of January 2015, where the euro lost 20% against the Swiss francs. But those events are just, I would say, are not a recurrent. Okay, so they are not events that will happen often, etc. Okay, those are black swans, if I can call it that way. So unpredictable events. So no one is expecting it, and sometimes it happens. So that's also statistical. You know, if you have 1% of chance of being trapped in a very, very bad position, statistically it could happen. So you gotta be prepared, and you also have 1% chance of making the trade of your life. You gotta be prepared too. So you know, when you are in a good trade, you gotta smash the market, and when you are not in a good trade, you gotta reduce your exposure or hedge your position, or take actions to also limit the losses. And the euro against the US dollar is basically for me a good trade because it's a carry trade. So basically we are making money on the direction of the trade, but we are also making money by simply holding the trade into our portfolio. So this is something that is really cool. Tonight it could change a little bit because with the Fed publishing the minutes, investors are looking at the Fed and they are wondering if the Fed is going to cut its rates this year or not. Because at the beginning of the year, so in January, etc., so last month, and plus with the coronavirus stuff, investors fears that the US inflation is going to slow down just because of that, of those events. So as you may know, or if you don't know, I will just tell it to you right now. The Chinese, the PBOC, so basically the Chinese central bank, so the popular bank, popular PBOC. I'm just confused with the French one and the English one. So basically, the central bank of China, will get it simple, stated that it will support the market, that it will inject liquidity in the airline companies that lost and suffered because of the coronavirus. It will also consider mergers to strengthen some companies that have been hit severely. So, so you see, basically, I would say central banks are trying to basically take actions to make the coronavirus episode a non-impacting event on the financial market at least, because on the human side there is some impact, but on the financial side they try to protect the market against this. But some investors who are more careful and more skeptic, I'll say, are looking to, are wondering if the Fed is going to cut its rate at least one time in 2020, so this year, to support the global inflation of the U.S. economy. Personally, I don't think so. The Fed cutting its rates will just send one message to the market, and that message will be a negative one. So basically, it will say, "Okay, guys, we are in we are in troubles, and we need to cut rates to support the economy." So I don't think that the market and Jerome Powell will choose this option, but everything is possible, and we will have more information tonight. All right, guys, that's all for me for today. I shared with you all my strategies and all my thoughts about the market. So basically, for the Fed, I'm expecting no changes at all. I'm not expecting any rate cuts this year for one reason, because first, it will send a very negative message to the market, and the Fed is not in that kind of I would say in that kind of configuration. The Fed wants to show the world and the economy that they are strong and they have no problem for now. There is also, and there are also, sorry, the U.S. election at the end of the year, so I don't think that we will have a lot of monetary policies shift, because I think that they will try to keep something in balance, um, and then they will adjust to the new United States president. So I think that the Fed will be steady this year in its monetary policy, and they will see then who will be the next leader of the United States, and then maybe according to who is elected, change its policy or not. So that's my view on the goal. I'm rooting for the bullish side. So basically, I'm really optimistic for the the $1,700 per ounce scenario, and for the what, and for the Dow Jones, I'm still bullish. So this position and this trade is more complicated. My timing was not that precise, but I'm still bullish on it. And it could look weird. I'm bullish on the gold, so basically on a risk adverse, I would say, asset, and I'm also bullish on equities. But it has sense, and you will see why. I will explain to you maybe in our next webinar together. So maybe tomorrow, or if you want, we can also discuss it directly on Facebook, which could be also a lot easier for you and for me, because it's more direct also. Have a nice day, guys. The market is opening in less than 6 minutes, so be ready. We have a lot of actions to follow, and tonight the Fed is going to rock the market, so we gotta be prepared. Take care.